The market is crashing and it looks pretty bad, especially for stocks like Tesla and all the other growth stocks. So what does it all mean and what do we do now? Specifically, what do I do now in this very stressful situation to make sure we are maintaining alpha and not doing the wrong thing when others panic? So let's take a quick look what's going on. I want to start with an overview over what the pre-market says. We are probably already trading when you watch this. But the first important takeaway here, shout out to Shay Bulur for this tweet on X, is this has nothing to do with Tesla. Number one, you see that a lot of stocks sell off like crazy after selling off more than Tesla yesterday, and now in pre-market even more. And these are the usual suspects. It's Palantir, SoFi, Hood, all the way up, right? HIMS and so on and so forth, Rocket Lab. So we see all these growth and momentum stocks selling off like crazy. I commented on it earlier this week. This is a rotation out of these stocks into a broader market, which broadens out the rally, which is a good thing. But since yesterday afternoon, it's clear that, maybe we also have a little bit of a general market sell-off. Not much, by the way, not much. But these stocks are hit dramatically. So now we have to buckle up and think about what this all means for us. I explained before, I put the risk of a seasonal correction at about 50%, which, by the way, for those of you who know statistics, doesn't mean it's a coin flip. Normally, the risk for a seasonal correction is much, much lower. I said it's going to happen in September and October with a 50% chance. It didn't happen, so maybe we are postponed and we are looking at a correction. That's the first possible situation. What I said about Tesla before, I said we are in this channel 410 to 460, but I always give this caveat that is only true if the market doesn't do anything crazy. Well, guess what? The market is doing something crazy. So the channel is totally gone. Forget the channel. We have to think away from Tesla and we have to think about the market now. None of this has anything to do with Tesla. In stressful situations like that, Tesla is just going to move with the market or its reference bucket of high growth stocks. So all the fundamentals, all that stuff, all the technicals on Tesla are out of the window. They do not play any role right now. Only the market plays a role. So for Q4, I also said Tesla will very likely trade in line with the market because I don't see any catalysts that are serious coming up for Tesla in Q4. And I made this very clear. And I think that's exactly also what we are seeing. Tesla will just move with the market with its beta. If the market goes up, Tesla goes up twice as much. But if the market goes down, Tesla goes down twice as much, or even more if it's a specific sell-off for these high growth stocks. That's the bigger situation. And we are definitely in some sort of a crisis. Let's just take a quick look at the stock. We are in a tactical short-term crisis here. We have broken through all the basic channels that I defined. So here was the bottom of the previous channel. We broke through this. So the 410 is completely gone. We are now in pre-market at 385. We see that before the channel was actually at 350 on the top end. Not saying we are getting there. I will tell you exactly what I'm saying in a second. But this is gone for now, right? And as I said, has nothing to do with Tesla, and it has everything to do with the NASDAQ, and specifically with, you see this very similar pattern, by the way, very specifically with these high growth stocks. Hey, creating these videos is a lot of work. Please like and subscribe. It really helps out the channel. Now let's get back to the video. Okay, so now it's time to recognize all the channels, all the technical analysis for Tesla are done. Forget them. Forget everything you heard before. Now we have a red light situation for the market. The market is taking complete control over all the stocks. And what do we do in a time of mini crisis? Okay, here are just tactical things we need to consider, tactical rules before we go into my strategy or my tactic for now. But the general rules that are always true. If you're greedy, never try to catch a falling knife. Which means if the stock drops like this, like a stone, I always don't buy, right? Buying is stupid. Of course, you think, buy the dip, nothing strategically changed. And I agree, but it's always better to be on the right side of the V. I had a video like multiple months ago on the right side of the V, right? If something drops hard, don't buy into the drop. Wait until it recovers and buy into the recovery, simply because you don't know how deep that V goes. And since we are now decoupled from Tesla's fundamentals and from Tesla, the stock, and are purely in the market can do whatever it wants at any moment, especially very short term. So there is no bottom. This can be the bottom. 400 can be the bottom. 380 can be the bottom. 350, 320, 280, 250, 200, 120 can be the bottom. No one cares. No one knows, right? Anything can happen. So you want to be on the right side of the V. You want to see recovery before you go down. There's no floor. I just mentioned that. And I'm not a fan of technical analysis at all on a stock like Tesla when the market took over. Maybe if you know some super smart market technical analysts, you can listen to them. The main imperative for us now, for long-term Tesla investors who understand the fundamentals, understand the outlook, understand the tremendous revolution that is about to happen in 2026 and forward, the great price targets that have not changed a millimeter at this point. The main rule is you have to live to fight another day. Living in the stock market means don't be in any situation where any amount of drop of Tesla could force you out of the stock. Because if you're a long-term holder and the stock drops to $5, I don't care, because I know the stock's going to go to 1,000 very likely next year. So as long as I don't have to sell my stocks or my leaps, I'm fine. What forces me to sell my stocks or my leaps? If I'm on margin and I can't afford that drop. So that cannot happen, and we are in risky territory right now. So here's what I do. I have a quick, can I click on this? I have a quick summary here on X. Let me see. So we get to this, where I basically summarize exactly what I do. And I think that can be exactly a good instruction on what to do next. Tesla situation. Here we have it. So here is a quick summary of what I am doing and how I assess this. If you are just a long-term holder, in my opinion, there is nothing to worry about. Everything is green light, all engines are running, and AI revolution is on track. Nothing is changing right now. So if you're just a long-term holder with no other exposure, there's nothing to do. I would go on vacation, take a nap, check the markets. As long as it goes down, just ignore. But if you're tactically trading like I do, around your core position, or only tactically trading, which I don't recommend, but if you have a core position, you're just greedy, you want to generate some alpha on top, you know the whole story, then you have to separate these two buckets. You have your core position, that's all fine, and then you have your tactical position. The tactical position has much more risk. You have margin, you have short puts, all kinds of stuff you might have in there. For that position, it's very simple. We don't know how bad this will get. And that position cannot withstand any kind of extreme moves, right? If you are leveraged, let's say I will take all the leverage off the table. That's exactly what's going to happen today. I take all short puts off the table because it's kind of the effect of leverage where I can get killed if I'm not cautious. And you don't want to be on the wrong side of the V. So very simple. Reduce everything you have to your core position, and get rid of all the tactical stuff. Now, just to be clear, if you ask me, what is the most likely outcome of this whole mess? I think if you close positions right now, at 385 or whatever, the odds that you look stupid on Monday are much greater than you look smart. Like the odds that we see a recovery by Monday are bigger than a drop further down. But here's why this doesn't matter. It doesn't matter because this is about risk management, right? We are not talking about the core position. We are talking about risk. And I want to conclude this with a peace of mind message here. The peace of mind message is we have to understand nothing has changed. Everything is fine on a strategic level, but it's a scary moment, right? AGI is transforming the economy. Tesla is on track to become the largest company on earth within 2-3 years. Other AGI stocks will drive vast profitability growth. And so your only mission is to stay calm and survive and be part of this great revolution. And you can't be part if you get squeezed to death. Remove all leverage. Eat the losses. Do not think twice. That's too dangerous. Relax and wait. And don't be greedy yet. Wait for the V. The way I see it is, if I close all my short puts, I'm basically taking a loss. It's a serious loss. But that loss is the equivalent of 6 to 7 weeks of doing that alpha generation churn, right? That's what I'm losing. So in other words, if you have weekly short calls or puts, I had a lot of short puts, not a lot, but some. The amount of money I make per week on this, the loss I'm taking now closing it now is the equivalent of 6 to 7 weeks of doing that exact thing, right? If you separate these two buckets. That's how you have to view about that. Do I take that 7-week loss? Yeah, because I have way more gains than that on that specific piece of the strategy. Taking it off, who cares? By end of the year, I'm back where I am now in terms of additional alpha generated on top of all the other stuff. That is worth the price, because if you don't do it and something bad happens, then you're in a totally different world of pain that is just not worth the risk. So that's what I mean with managing your greed and the risk. You don't want to take risk in this situation, even though the odds that you look dumb and I look dumb on Monday are high. I'm not looking that dumb because of my core position. So I hope that is helpful. You should always separate out your different strategies. If you have core position, just hold. If you have a tactical position, well, you have to assess the risk and rather take the loss than taking unnecessary risks, and never hope. You have to act on these things. Otherwise, things can go wrong. So I hope that was helpful. We have much more updates coming daily now. This is a very interesting phase. I will have another video outlining the 4-week outlook, because I think this will be all over very likely by around December 9th when we have the Fed meeting. We have to look a little deeper into what drives all these problems here, what the market is actually afraid of. And then we have to look into if that fear is overblown or not. And that will be a very interesting video. So I hope you're tuning in. That will come out probably tomorrow. And until then, let's watch this little bloodbath play out and stay calm. Make sure you survive, because everything will be beautiful very soon. I hope that was interesting. See you very soon.